Hello and welcome. You're watching Business Today TV. This is Market Today and I'm Sakshi Batra, and this is where we discuss all the latest action on the street, on the D Street, especially the benchmark indices, the sectors and the stocks, and the way the markets are performing. Well, it has been a down day so far. Remember, it's the FNO expiry for the series, and in fact, we've seen the Sensex sink nearly 900 points in an intraday level. The Nifty is also cracked below the 17,900 mark, 17,850 on an intraday basis. Right now, if you see, there's a 240 point of a cut for the Nifty 50, down by 1.3%. The Sensex hovering about 800 points lower at 60,173. Now, what are the key factors that have really pulled the markets really lower in trade today? What has caused this kind of a sharp sell-off in the markets? Well, a whole host of things. If you look at, there are recessionary fears, there's the monthly FNO expiry, there's the sustained selling by the FIIs, some of the top heavyweight companies, they are looking at some kind of a sharp losses in today's trading session, diminishing earnings optimism. That can be one reason as well, and the continuous tech layoffs that has been being a concerning point all across the globe as well. Technically also, a lot of experts do believe that right now this is the time when the markets are very dicey at this point in time. We need to look at very closely to that 17,800 mark, because if the markets really slip below that, the next support levels could be 17,625 and 17,425 as well. What's also causing a decline is the Adani Group shares that have seen a very sharp sell-off in today's trading session as well. We'll also discuss more about that. But let's also look at some of the other noted points that you should look at as far as the markets are concerned. So there you can see it, Adani Enterprises, although it's pulled up from the day's low, it's just about a 1.5% cut. Adani Ports down 6%, so there's still some of the other group stocks that are down in trade. But also let's look at how the broader markets and the other sectors are performing at this point in time. In terms of the broader market indices, the mid and the small caps, they are also seeing similar cuts to the benchmarks. In fact, mid cap seeing a sharper fall. The India VIX level, that's seen a sharp surge, 7.7 uptake, and 14.7 is the level at which the India VIX is trading at. So clearly the FNO factor, expiry factor, the volatility, that's been on a rise. In terms of the advance decline ratio, you have 43 declines to 7 advances. So definitely the market breadth favoring the bears at this point in time. Which are the top losers that have caused this kind of a sharp fall and pressure on the index level? Well, when you see, it's Adani Ports, that's down by 6.3%. The top loser in trade, Indus Bank, SBI, some of those banking and financial names down in trade. HDFC Bank also seeing a cut of 2.8%. Cipla also, so HDFC Twins, both of them down by over 2.5%, and Cipla also seeing a cut of almost 3% in trade. Some of the other losers also, so a lot of banking names right there. Axis Bank, ICICI Bank also down in trade. On the flip side, you do have far and few stocks that are actually up in trade today. Maruti Suzuki, for example, is up by 1%, Hindalco, HUL, and Bajaj Auto, Hero MotoCorp. So it's the auto stocks that are perhaps doing the heavy lifting today and trying to stem the kind of losses that we've been looking at through the day on the index level as well. In terms of the sectors, well, all the sectors of the Nifty are down in the red, led by sharp losses being seen on the PSU banks today, 3.7% of a cut right there. And that's pulled down the overall Nifty Bank Index, that's down by 2.6%. You have financial services that are down by 2%, private banks down by 2.4%, realty down by 2% as well, IT stocks down by 1%, FMCG also seeing a sharp cut, and pharma stocks down by 1.3% as well. So that's as far as the current action really goes. Let's welcome our guest to really understand much more about how to really analyze this kind of a sharp fall in the markets and what should investors really do. Joining in with us is Mr. Kranthi Bathini from WealthMills Securities. He's the Director of Equity Research. Kranthi, welcome and thank you so much for taking the time out. Well, the screen doesn't look good today. 812 points gone there for the Sensex, 241 down for the Nifty. I did talk about some of the reasons that I have been speaking to experts and assessing, but as per you, what do you make of this kind of a sharp fall? And can this be the beginning of a sharper decline that we could see in the markets going forward?
Sakshi, you nailed the point very rightly. Is there any further decline from this level? We need to see technically 17,800 is the level, whether market could able to gain strength at 17,800 level, because market has been hovering around this 18,000 Nifty, which is as a epicenter for this fall, and also market has been consolidating in this range. If I have to go back and look at the market further deep down into the market position last 6 months, market has been came down below uh, nearly below 18,000 level, nearly 7-8 times in the past 1 year, and in last 3 months only it came down below 4 times. Whenever market comes breaks this 18,000 level, we can see uh, might be it can be the domestic or can be the international, the overseas regions, the global markets, but market has been witnessing some kind of weakness in this zone. Uh, what's causing this issue? As you rightly mentioned, different points. One is the FI selling, and what we can see this time is as the China markets are opened up, some kind of money that has to come into Indian markets, the hot money we can say, that has been slightly getting diverted to the other markets apart from India. So we can see some kind of pressure in the market, selling pressure in the market at this point of time. And we don't
Right.
see any kind of positive, great surprises from the earning season. What we are witnessing is, thank God, there are no negative surprises, but at the same point of time, there are no positive surprises for the market to boost the earnings and give margin of safety for the market at 18,000 level. So we need to watch carefully next couple of days how the market is going to build its strength at this range of 18,800.
Okay. What would you really advise investors at this point in time to really do as a strategy? Because, tomorrow there'll be a market holiday. So you do have a truncated week right there. And then there'll be just a few days, right ahead of the big union budget that could provide some further triggers to the markets. But so how would you really advise investors to really approach this market that has been consistently volatile and now seeing a sharper fall?
Yeah, from the new year started, the markets have been volatile. That's what we are witnessing. And from the next Friday onwards, India has been moving from T2 segment to T1 segment. It's going to be a very interesting market going ahead, because gone are those days of for the investors and traders uh, buying a stock on a T day and waiting for the delivery till T plus 2. Now we are moving, market is going to be more dynamic, and we can be ready these kind of high market heightened activity in the days to come. That is apart. uh, Market is waiting, a lot of money has been waiting in the sidelines for the uh, for the any kind of uh, news or positive boosters for the budget. That is the next trigger is going to be. But right now there are a lot of things to get to discuss on the budget. That is a different thing. But for the investors, how they need to do, they can start investing in this level, because the earlier history says whenever markets are in this range, we can see markets gaining further strength going ahead.
Okay.
If history is the norm for the next couple of weeks, investors can start doing cherry picks, the blue chips like HDFC banks of the world, or any interesting theme which have a strong earnings track record and the visibility is good. Investors, they need not have to fold their hands and just to see the show. They can start participating in the market. They can start accumulating the chips at this range also.
Okay. The other big news point that has been a cause of worry for most of the investors today is the kind of fall that we have seen on the Adani Group stocks today. In fact, these stocks on an intraday level have in fact lost a 46,000 crore rupee in market cap. I mean, like, that's a staggering loss that we have seen in just a single day. And this is after the Hindenburg, report that has alleged fraud at the company's end as well. Now, just for the benefit of all our viewers, let me just reiterate what exactly this report has mentioned. Now, remember, this Hindenburg research is a well-known US activist investor, and it has alleged that Adani Group has been engaged in a brazen stock manipulation and accounting fraud. Now, this is a charge that the conglomerate has described, Adani Group has described as malicious, unsubstantiated, one-sided, and having done with malified intention to ruin the share sale of the upcoming FPO as well. So first up, let's take it into parts, Kranthi. One, how did you assess this report and the timing of this report?
Yeah, the first and foremost is the timing of the report. There have been the news is what we come across with respect to the valuations. And Sakshi, if you remember, just exactly a year back, this kind of news has been surfaced on Adani Group shares. And
Yeah.
because of that news, exactly a year back, stocks have been tumbled, and again, they have regained their strength. And from there onwards, we have witnessed a big rally in Adani Group shares.
Sure.
So one thing is, if I analyze the report each point, there are certain allegations made by Hindenburg report, the investor activation uh, 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 company, and the timing of the report, as what are the points what they have mentioned have been are there. It's not new, something which happened yesterday or today. If they want to bring this report, they would have brought this report in the public domain a 6 months back or a 3 months back. But the timing is suspicious. And as Adani Group statement, it says they have mentioned all these are malicious rumors on the group, and they stick to their corporate governance. And whatever be the statement, what Adani Group says, is, these are just the rumors, and they ruled out all these points. So, as what investors need to do, as investors very much aware, all the Adani Group shares are high beta stocks, and their valuations looks always stretched. So, whenever these kind of news or any kind of allegation that get surfaced, you can see the stocks get tumbled. So,
Sure.
so the existing investors can hold on for their positions. There is nothing to worry. We need to see how and at the same point of time, coupled with today markets also down, they are trading at a negative sentiment. So the point I'm trying to tell you is the timing of this report, and all the whatever the allegations they made in this report are not proven till date. So
Sure.
one thing is why today only they released this report, and the second thing is uh, these are all unproven quotes.
Sure. Okay. So let's talk a little bit more on the upcoming FPO. Now, Adani Enterprises has already finalized its anchor book for the forthcoming 20,000 crore rupee follow-on public offer. And the report suggests that there are reports that suggest that the issue has been oversubscribed to 1.8 or 2 times. And we've also seen that, a large chunk of around $200 million odd, has been looked at by IHC, which actually invested $2 billion earlier in the Adani Group companies last year. That group is actually looking to get the largest chunk of $200 million right there. Apart from this, of course, there are the bigger investment companies like Abu Dhabi Investment Authority, Mubadala Investment Company, BNP Paribas, among the other bidders already as well. But looking at the price band, 3112 to 3276 price band, I wanted to understand from you, the size of the FPO is quite large. We know that as a big fact. It's the only third largest as we compare it to the big issues that we've seen in the past, be it the IPOs or the FPOs. And now, looking at the subscription levels, etc., how do you really see the demand scenario? Can it really sail through in this kind of a market?
Uh, yeah, you rightly mentioned it is one of the, I can say, the largest FPO, and 20,000 crores is a big sum to subscribe. But they
Yeah.
all have the anchor investments and commitments, and the prominent names have been there lined up to be the anchor investors.
Yeah.
And definitely, given the kind of the group positioning in India is concerned, and also from the retail also, definitely the issue can sail through, Sakshi. There will not be
Okay.
any second thought with respect to the subscription of the issue is concerned.
Okay. Also, apart from the concerns that have been raised in the report, and of course, we will look at the findings and, the other side as well. But, one major concern that some of the analysts have really pointed out with respect to the Adani Group stocks is the huge debt on the books. Although Gautam Adani himself, in an exclusive interaction with India Today Group, did talk about that this is not at all a concern right now for the group at all, but your own sense as to whether debt concerns can actually derail the momentum that we have seen for the Adani Group stocks.
Actually, first, I would like to mention one thing. There are no analyst coverage on Adani Group shares. You don't find any buy recommendation. You don't get any detailed report from any prominent broking company or prominent research house in India. It is very less under-researched group in India, officially, if I have to mention. And coming to the point, Mr. Gautam Adani have given a first public detailed interaction to your news channel group, India Today group, and he categorically mentioned that debt, what he raised is a manageable debt, and the group where they are in, they are in terms of their ports and in terms of their airports and all the other segment of businesses, the power, infrastructure, all these business segments are strong, and they are the going ahead. They are going to create free cash flows for a period of time. So the gestation periods are high for these businesses, and also the entry barriers for these kind of businesses are quite strong. So, given these kind of positives embedded in the business models of the Adani Group companies, the debt is manageable over a period of time.
Sure, sure. Okay. Just one last question on the Adani Group stocks then. For the FPO first, should the investors really consider, the retail investors really consider, going for this FPO? And secondly, overall speaking, in the Adani Group stocks, with those investors who've held on through the golden period that we've seen these Adani Group stocks creating wealth, what should the strategy be for them?
Yeah. First and foremost is whether the investors can apply for the FPO. If you have to look at the past 6 years or 3 years performance of Adani Group, if you're not invested, you missed. So, if the past can be repeated in the days to come, there are some positive indicators for the group for the kind of business models they operate. So, high risk appetite investors definitely they can take part, chip in, and invest in the FPO. And the second part of your question is the same kind of momentum is going to continue as the business models are considered. The same can be repeated. We need to see how the earning results and quarterly performances of these companies, how they are going to reduce the debt. These are the parameters that are going to drive the stock prices going ahead.
Hmm. Okay, understood that as well. Let's now move on to really talking about the other news points in the markets today. A whole host of other earnings have come about. Let's talk about some of the pharma majors. They've come out with results. Say, for example, Cipla has come out with its results Q3 FY23, where the consolidated revenue has come in at 5,810 crores. The consolidated EBITDA was clocked in at 1,407 crore rupees as well. The PAT was 801 crore rupees, and the consolidated margins also improved year on year to 24.2% right there. Although the stock has reacted on the downward side, of course, there could be some pressure of the overall earnings, overall market scenario. And then consolidated. I wanted to understand from you what exactly has then, not been cheered by the street in the earnings.
See, one thing is the entire pharma index is down, and also all the pharma stocks have been in a negative territory, except names like Sun Pharma and Cipla. So, investors with a long-term horizon, definitely the big names they can cherry pick right now because farmers over a period of time, long-term basis, they have been the outperformance. Going through the history of these stock names are concerned. So right now, if I have to tell is pharma is at a sweet spot? Definitely no. Uh, there are concerns with respect to US FDA inspections, and also the sales of pharmaceutical companies are concerned for a period of time. One good thing is the input costs have been coming down, and the logistic costs, because uh, the major pharmaceutical companies in India, 65% of the product is exported. So the logistic costs have been a big toll for all the pharma export oriented companies in past 1 year. So what we can see is a reduction in the input prices and also the logistic prices. All these prices have been coming down right now. So
Hmm.
there is a possibility of earnings growth and also possibility of margin growth that can expand going further with respect to
Okay.
pharma companies are concerned. But there is no trade in these companies in the medium to short term. Definitely for the long term, Cipla can be a stock to be on the investors' radar.
And how would you then talk about the sector leader Sun Pharma? That stock was also in news today, although the stock has been sulking, but the company was in news today because the company has launched Sezaby, phenobarbital sodium in the US. The company has launched this for the treatment of neonatal seizures right there. So another launch coming in. But what are the key challenges that Sun Pharma currently really faces for all those investors who've been holding on to the stock for years and years in hopes that the company has a sound fundamental, has a great management, the business model is strong, but why is the stock really not been able to perform on the street is something that most of the investors have not been able to understand. There are time and again periods when we do see a move on the upside, but is that sustainable? Will that continue to give incremental gain is something that investors are failing to understand at this point. What are your thoughts on Sun Pharma?
Actually, one thing is, if I'm the investor in the Sun Pharma, uh, one good thing is, even though I have not gained anything, but I have not lost anything. So for the investors with a very less risk appetite and a moderate investors who want the returns just to be just above the uh, fixed revenue kind of returns. Okay, Sun Pharma is a stock that can give a stability to the portfolio. So those kind of investors, Sun Pharma, as you know, right now as the stock is flattish in a day where Sensex is down, and when the stocks are in a deep red, the when Sensex is down 216 points, the stock is flattish kind of move.
Sure.
So those kind of investors can definitely consider Sun Pharma. You don't expect any kind of outperformance or multi-bagger kind of returns from these the large cap stocks in pharmaceutical space. They can even not even mid-teen returns also not possible, but over a fixed deposit kind of returns definitely possible in these kind of business models.
Okay. From one defensive sector to the other one that let's focus on, IT space and the new earnings that have come about today. Team Lease has, released its Q3 earnings. The net profit was down sequentially 9% to 29 odd crore rupees. The revenue was up 2.7% sequentially, so just about 2008 crore rupees. EBITDA was flattish at 31.7 crore rupees on a sequential basis. The margins were flat at 1.6% as well. Speaking vis-a-vis the kind of earnings that we've seen for the large and the blue chip majors from the IT space, how do you assess the earnings of Team Lease, and what would you really advise as an approach for investors who really want to have a portion of their portfolio, absolutely allocated to the IT and the tech majors?
One thing, Sakshi, there are no negative surprises with respect to IT is concerned. The large cap companies like the big tech majors like TCS and Infosys, of course, TCS is just below the expectation, but they could able to manage and Infosys, we can see the strong guidance. And if you observe the mid tier, the IT companies like Persistent Systems, they all come up with a very good, strong profitability and margins growth. So
Mm.
the and if you interact with the mid cap IT companies managements, they're quite sanguine about the business fundamentals in the times to come. But they're maintaining is a wait and watch kind of approach right now. And if I got the opportunity to speak to a couple of the small cap IT major companies, they don't see any kind of slowdown in terms of their order book is concerned. So there, there is a uh, uh, there is a kind of dichotomy with respect to IT space is concerned. Definitely, investors need not have to stay away from these stories like team lease kind of thing. These are the business models which have performed very well in a longer term basis. Definitely, any crackdown in these kind of names definitely gives a opportunity for the investors to accumulate for a longer term basis.
Okay, understood that. Well, last question to you, Kranthi, for the day as we wind down the show, and the markets also are just looking to shut shop for the day after this, kind of very, very subdued trade. In fact, in the markets that we've seen, almost like a 727-point cut is what we're looking at the closing level. How do you see the next series, the new series, really panning out? The first series being very, very volatile for investors. What can the investors expect?
One thing is what we can expect from the next series is some kind of earnings upgradation. We need to see the entire whole scenario of the earnings season. We need to deep down the how the earnings are going to be expected. And market is a forward-looking animal, Sakshi. Right now, the budget is there is a overhang of budget. How the budget is going to be. So we can expect a positive mood from the next series
Sure.
going ahead. And as Nifty is holding 17,900 levels, uh, s- and I can see in the next coming series Nifty again heading back to 18,000. That's what I can expect from this series.
Okay, well, thank you so much, Kranti, for being with us and sharing all the insights about markets, the different pockets that we've discussed, several of the stocks and the Adani Group stocks especially that have been the limelight of the day. Thank you very much for sharing all these insights with all our viewers. Always a pleasure having you with us. We shall continue to do more interactions on markets going forward too. Let's quickly look
Always a
at how the
pleasure.
markets as to how they are doing at this point in time as well. A 773 point of a cut at close for the Sensex, 60,205. That's the last print, the final print that you see for the day that has been kind of very, very worrying for all those investors who've been looking at markets showing some kind of a recovery and an uptrend in the current scenario. But what's a positive? Look at the positive right here. The Nifty at 17,911. So there has been a recovery from the lowest point of the day. 206 points gone there, 1.14% of a downtick. But look at the pockets where the green indications have come in just towards the end of the session. Autos and FMCG. Those are the two sectors that have managed to recover and close in the green. Whereas PSU banks, that goes down with the sharpest fall today in terms of the sectors, 3.5% cut for that one. The Nifty bank down 1,062 points today. So you can see that FMCG stock, the last one, 10 minutes kind of a move on the upside that you've seen. The Nifty bank 2.5% down, completely bogged down by the PSU banks, the private banks and the financial services, down by 1,062 points right there. The realty space down by 2%, private banks also down, metals absolutely flattish, IT down by 0.8% and the pharma stocks dragging by 1.17%. And with that, we wrap up this edition. Many thanks for tuning in, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets. And also you can stay in touch with us via our other social media platforms like Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.